How do you summarize a phenomenal 2023? We'll dive into the numbers. We'll dive into how the year ended in the major averages. We'll dive into different aspects of 2023 and, of course, talk about 2024. And also, a bonus. At the beginning of each year, there is a strategy called the Dogs of the Dow. We're going to talk about them, and we're going to see how they performed this year, and did they beat the benchmark, which is the S&P 500, or did they underperform? Are you ready? Summarizing 2023, a quick preparation for 2024. Let's go! So hi everyone and welcome back to the channel. If you're new, I'm Micha Stocks on our channel called Stock Talk with Micha Stocks, where we try to look at the markets in a refreshing way, in a way that we summarize each week what happened and the reasons why it happened. Usually we cover the news. On this summary, I want to summarize 2023. You know, we ended a phenomenal year. And let's talk about it. If you're new to the channel, by the way, it would be amazing if you can click that subscribe button and, of course, turn notifications on so you'll know every time a new video is being posted. It's not a secret. I already mentioned 3 times that it's a phenomenal year. S&P 500 ends, including dividends, ends the year with a whopping 25.5%. NASDAQ, heavy on technology, up 5.9%. Russell, smaller caps, Russell 2000, up 17.4%, and Dow up 13.7%. Interestingly enough, you can see that as of October, the best performing sector or the best performing average was actually the Russell, the IWM, better than the NASDAQ, better than the S&P 500. If you want to look at the heat map, this is how it went down. The biggest stocks in the market were the ones that led the market for the gains. If we change the market caps all the way up to $700 and something billion, you can see that the biggest by market cap companies in the S&P 500, Microsoft up 54%, Apple up 47%, Nvidia 233% on the year. Google up 55.9%, Meta up 188%, Amazon up 77%, Tesla up 109%, and Berkshire Hathaway up only, air quotes on the only, 15%. But that is a regular way to summarize the year, looking at the numbers. I want us to, you know what? Let's do a quick exercise. Think of yourself as an alien that is coming to Earth. He knows how to speak English, and I'm going to describe to him all the major things that happened during 2023. And at the end of it, I'm going to ask the alien, which is you guys, what would you say the market did? Let's start. Inflation is still running hot. It's cooling a bit, but it's still existent. 4 banks closing shop and basically losing some of their assets, if not all. Mortgages, all-time high. Actors starting a strike for months. Actors, movie actors. Car industry, auto workers launch a strike with the biggest companies in the world. The American Fed, I'm explaining to an alien, raises rates to the highest point it's been in 22 years. Mortgages are at the highest percentage 20 years. And there is a horrific attack by Hamas on Israel. Now, if you're an alien just landing on this video and trying to say to yourself, what would the market do after I heard all those news? What would you think? Crash, right? Well, that wasn't the case. Apparently, all the news that I've read to you, except maybe 2 or 3 good news, happened during the year. Yet, the S&P 500, which you can see the chart here, went up. Before we go over them, why did that happen? Well, basically, the market predicts things 6 to 9 months ahead. The consumer was very resilient in 2023 and pushed the markets to new highs. The bad news was shaken off time after time after time. The only pieces of good news that I didn't share with you was that Nvidia value neared $1 trillion after the AI chip or the AI boom that they had in their results. And the second was that Amazon deliveries top UPS and FedEx. All the rest you've heard, and yet the market went up. That is a huge lesson for anyone that's in the market and listening to financial news. Always clean the noise and look at the charts. When we look at the 10-year, the treasury yield, you can see that the performance of the 10-year looks more like a meme stock. Just like AME and AMC went up all the way to 5% and down all the way to below 4% with all the news that you've seen so far. That's how crazy this year was. When we look at other metrics during the year, we can see we battled inflation. And you know what? Maybe the Fed was right. Maybe the inflation was transitory, because during all of 2023, we've seen the deflation entering our lives with prices maybe still going up, but in a slower pace, to a point that hopefully, according to economists, in 2024, we will see prices even going down. That's what happened with the prices. When we look at the labor market, the employment, we see job openings went all the way up in 2022, then they cooled down, and we still have a very, very resilient labor market, but we do see that sanity is back and companies are not paying any price for new hires. One thing that I think would be a lot more dramatic in 2024 than we expect, at least from my perspective, is the presidential race. When we look at S&P 4-year presidential cycle, you can see that the third year of a Democrat president the statistics says that the S&P goes up 18%, went up 25%, it went up 83%, so we met that. The fourth year, we should go up 9.5%, not should, but statistically saying this might happen. And there's a 73% likelihood, and this is how the chart looks on an average scale. You can see that except 2021 that we kind of went overboard, then we crashed in 2022. Basically, since October 2022, we gained, or we went back to the averages themselves. But we do know that currently there is a battle on who's going to be the presidential candidates. And since this is not yet lined up, there might be surprises, and I think this might be the black swan during 2024, at least from what I'm afraid of during the year. When we look at the sectors that contributed the most in 2023, we can see that technology contributed the most. You can see that here on the right-hand side, consumer discretionary. And if I didn't mention, thanks to Bespoke for sharing all this valuable information, you can see consumer discretionary contributed. These points are by index points. Then communication services, financial and industrials. And when we look at the biggest positive contributors in 2023 for the S&P 500, you can see the Magnificent Seven: Microsoft, Apple, Nvidia, Amazon, Meta, Tesla, Google. And then you can see Broadcom, Eli Lilly, CRM, Adobe, and others. All of them contributed during the year. You can see even other companies that are out there like Berkshire, Intel, Netflix. Intel with an amazing year that they went up almost 100%. We're going to talk about them in a second. So those are the major contributors to the S&P. And when we look, if this would change, we look at the changes of weighting during the year, because the S&P 500 is a breathing index. You can see that technology grew even more, or the impact grew even more. Communication services, financials, and consumer discretionary. On the other side, you can see that healthcare shrunk during the year because of underperformance. That is good and bad in the S&P 500. It's a breathing mechanism, and that's That's something that helps it stay relevant and outbeat any other average. When we look now at 2024, you know what? Let's start by 2023. These were their targets. Okay, before we look at this, 47. What did we end? Let's check this out. We ended with the S&P 47.69. That's how we ended. Let's look at what the major economists thought or how they thought we would end. Check it out. Deutsche Bank, 4,500, missed. JP Morgan, 4,200, missed. Wells Fargo, 4,200, missed. Bank of America, 4,000, missed. Citibank, missed. Goldman, missed. Morgan, missed. UBS, missed. Barclays, missed. BNP Paribas, missed. The only strategist that nailed almost to the T, 47.50, was Tom Lee from Fundstrat. Amazing predictions. He predicts that 2024, the best performing average and asset class would be the Russell 2000, ticker IWM. If he's right or not, I don't know. But I do want to remind everyone that everything you see here and you hear here and you enjoy is entertaining and educational. It is not financial advice. You should be very wary of where you invest your money, who you consult with. It should be a financial advisor. And I'm just sharing with you how I see things and my opinion. When we look at the year-end forecast for 2024, this is how it looks like. Reminder, we ended 47.50. Actually, even more than that. So, Barclays predicts we're going to end unch on the year. Bank of America up, RBC up, Goldman up, BMO up, Deutsche Bank up, Fundstrat up, Oppenheimer up, and Ed Yardeni from Yardeni Research thinks 5,400. But, and this is what you should be prepared for. Evercore, Wells, UBS, Morgan Stanley, and JP Morgan are preparing their financial institutes for a red year. Whether it's going to be a small red year or a big red year, it doesn't really matter. That is their forecast for 2024. The market doesn't agree with them. The market sees 3 to 5 rate cuts during 2024, but they see things in a different way. Who's going to be correct? We will know that only at the end. Now, let's talk about the dogs of the Dow. The dogs of the Dow is a investment strategy that every first day of the year, you take the 10 highest dividend yield stocks on the Dow Jones average, you create a bucket, and it is supposed to beat the S&P. I've done that test. I've done it actually in January, believe it or not. And these are the stocks. JP Morgan, Chevron, Cisco Amgen, IBM Triple M, Walgreens, Dow, Intel, and Verizon. Let's check what they did. Remember, S&P did 25%. JP Morgan up 29%. This includes dividend. Beat the S&P. Chevron minus 10% did not beat the S&P. Cisco plus 8% did not beat the S&P. Actually, they were on track of beating the S&P, but September 1st was their peak, and then they went down. Amgen up 13.8%, did not beat the S&P. IBM up 21%, did not beat the S&P. Triple M down 5%, did not beat the S&P. Walgreens down 24%, did not beat the S&P. Dow Chemicals plus 13%, did not beat the S&P. Intel up 92%, beat the S&P big time. Verizon up unch, did not beat the S&P. By average, all of them together, if you would bought 10% of your portfolio, each of them, you would be up 13.7%, which is amazing. But in a year like 2023, you have not beaten the benchmark, which is the S&P 500. What does it teach us? What does it teach us? It teaches us a few things. One, that it's very difficult to be a stock picker. Very, very difficult. If you would have picked Intel, you would be up amazing, 92%. But if you would have picked Triple M, you would be down 5%. Not to talk about Chevron that a year before outperformed everyone, down 10%. and others, very difficult to stock pick. The other thing that we need to remember is 2023 is the outlier. I wish every year was like that. I wish every year markets would be up 25 to 55% depending on the average. But it's usually not the case. And we should be prepared for around 10% in average of gains in the S&P. Over 30, 40, 50 years, that is the average, not 25%. And that's why 13.7 sounds bad, but it's actually amazing. If every year you would get 13.7, it means that you beat the average of the S&P. So is it disappointing? Yes, because it didn't beat. Should it be disappointing? Probably not. So how's 2024 gonna be shaped? Well, we don't know yet because we haven't been into the future. What we do know is that we have rate cuts. We don't know how many. We have an election year. We don't know who are the nominees yet. Not the Democrats and not Republican. Theory, yeah, it's Trump-Biden. But currently, it's very theoretical. We have a market that hasn't yet corrected from a huge run from October. We have Bitcoin ETF, which we haven't addressed yet, that might be approved or should be approved. We just don't know when. And we have a war between Israel and Hamas, maybe even Israel and Hezbollah, maybe even America and Iran. We have a lot of things in play. We have oil going down. We have so many things that might happen. And that's why it's exciting to be in the stock market. But remember that Warren Buffett keeps saying that if you want to invest for the long term, just buy the average, buy the S&P 500. That's what he says. And there's a lot of logic to that because it holds the 500 biggest companies in the world. I hope you enjoyed this 2023 and 2024 summary and preparation. Smash that like button if you did. You can write me in the comments if you'd like more things to be shared on our weekly videos. And till next time, bye-bye.